Tesla has taken a hit after Musk decided to cut down prices in China. So is this a bad sign or should you buy? Stay focused as we answer that by going through recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. First up, the Model 3 prices have been cut down from £34,000 to £32,300 and Model Y from £38,000 to £34,000 for the Chinese market. Some analysts fear that this is a result of lowering demand and rising competition. BYD has already taken the lead on Tesla when it comes to China's EV market in the first 2 quarters this year in terms of sales. Next up, Morgan Stanley analyst Adam Jonas has reduced his price target from $350 to $330 following the earnings report, which he said still exceeded his expectations despite falling short of revenue targets set by the company. Apart from this, option activity suggests that most traders are betting on the stock falling towards the $200 level, and considering Tuesday's pre-market price of $209, this might turn true, indicating another 3 to 4% fall. With all that in mind, let's analyze the charts. So as you guys can see right here, we're now in the one-day chart for Tesla, and right off the bat we can see that, well, we're not headed towards $200, right? We opened at a gap down on 209 or rather 210, but of course we got supported by the psychological $210 level. So let me mark that real quick. And of course, after that we went to a price of 217.55. We've just made a small wick on the upper side, which indicates that we have not fallen much after, going up. We can see that over here on Monday we got a 4% gap down. Right, we made a huge wick on the downside as well, which indicated that we had great selling pressure, but the spin bar pattern somewhat indicated that the stock will probably go up on the next day, because as you guys can see that a pin bar candle basically indicates that the sellers did try to push the stock all the way down, but buyers pushed it into this range and it kind of squeezed in here. If we talk about the support and resistance levels, we can see that we're headed for a resistance around the $220 range. And right before that, we have a resistance around here at the $217.75 range pretty much. So that's where we're getting resisted right now. So if we look at the overall trend, we can see that we're of course in a bearish trend, but we're trying to reverse that since we've pretty much touched a bottom around the $206 range. Right after that, of course, the actual bottom was the $198, $199 level. But of course, we got supported by the $200 support range, right? The $206 level was the last actual support zone. After that, there are only psychological support levels between 206 and 182 pretty much. So what this basically means is that if we get some more bad news, the stock is headed below the $200 range, because we've already breached the $200 range over here. And once you breach a range, it sort of becomes your target, right? So it's kind of acting as a magnet over here, and the stock will likely be attracted over there. But as you guys can see, we've already broken this resistance that was resisting us over here. And now we are headed for the $220 range. In my opinion, we should probably get a pullback from the $220 level. Of course, the entire market over here is in the green, so that might actually turn out to be a false analysis, right? In my opinion, it should probably get a pullback from the $220 level, but you can never trust the market, so always do your own research. But even if we do cross the $220 range, we have a resistance right ahead around the $222 level, right? So that will probably cap it over here in this range. Of course, again, in my opinion, 220, we'll probably get a pullback. Once we get a pullback, probably into the $218 range, we'll probably be over here. Anyways, with that, my price target for Tesla still remains around the $300 range, and I'm still bullish on the stock. But now let's get into the 1-hour chart to analyze things in more detail. Now that we're in the 1-hour chart, we can see that the 1-hour chart has a completely different story to tell. So on Monday, we of course opened in a gap down. The first candle was red. We fell all the way below the $200 range. Then we got supported. And after that, we're trying to form a bullish trend over here, right? We did get a negative candle to close off the 24th October trading session, but it did not impact the stock much. It only resulted in a gap down and a continuation of the bull run. If we were to get some levels, of course, from this chart, we can see that over here, the 205.29 or rather the $206 range is acting up. Over here, we can see that around 207.5 we have another support. if we look at the previous chart, we can see that we have another support and resistance around 210, of course, right? That's psychological. And after that, we can see that we have another support and resistance around the $217.75 range, which I already told you, right? So that's a normal level. After that, 223, right? Over here at 224.95, pretty much 225, that's kind of psychological. So now we can see that the first candle would probably end between this range below the $220 level, in my opinion, right? And of course, we might, get a green candle over here, a small green candle, squeeze into this range. And once we're kind of squeezed into this range, I believe that we'll, either get a breakout, which I really don't believe is possible at at this particular point, or then we could either get a breakdown, because as we all know that only the chart analysis cannot do anything, right? News, fundamentals, financials, all of these things account with the chart analysis for the price movement. So of course the stock definitely does not look like it's in a good position right now if we talk about the fundamentals and the news part, and the chart is just a reflection of that. So with that, I don't believe there's much left to analyze in the 1 hour chart, so let's quickly clear off all of our drawings, and now let's head into the 5-minute chart. Now that we're in the 5-minute chart, this is where the real stuff is. And now we can see that we've taken this 218, or rather 219, semi 219 level as the top ceiling. And now we're making somewhat of a reversal pattern. If this particular candle turns out to be like a pin bar one, like it's right now, this would indicate a reversal to the downside. And of course, we'll fall down. Well, it's kind of happening. And as I already told you, we probably won't be able to cross the $220 level. So of course, we have a support around the $217.5 range now, right? It was a resistance and we turned it into a support. But below that, we can see that we have a significant level around $213. And of course, 215 would act as a psychological support as well. So we'll probably stay between this range for some time, 217 and 220. And after that, we'll probably get down all the way towards the $215 level. In my opinion, we should probably not be able to get towards the $220 level by the end of the day, right? This probably should not be the closing level, in my opinion. The day would probably close off around 215, or at least below 217 for that matter, which of course could be wrong because this is just my own opinion and not financial advice. But if we look at other factors, we can see that we got a negative pin bar candle over here in a positive scenario, which indicated a continuation to the bull run. Over here, we got some more squeezed up candles, right? This indicated that huge volume is coming up, volume's fading away. So of course, it might just be the exact moment that a big green or a big red candle pops up, and it might be a big green candle, right? It would probably get towards 220, but it won't cross 220. That is, again, just my own opinion. If we look at the previous charts as well, we can see that over here, for example, a pin bar candle indicated this sell-off that we got, and this pin bar candle failed because we got a green candle right next to it. So over here, again, we can see that we got a green pin bar candle on the upside followed by an uptrend. We can see that over here, we got some range bound market at the level of 206. Of course, that is a significant level. Under that, we can see that we have another level around 205.75. After that, over here around 207.75. So this bull run that we see over here might just be a continuation of this thing, right? So let me quickly get a trend line, and we can see that it might just be a continuation for this. Of course, we did fall down over here, in between, and this was a level at 210. We got supported over here on the 25th October starting, and this candle is about to close down, and it might close in a pin bar candle, as I already told you. So I'll be back in 50 seconds once this candle closes. That candle did not end in a pin bar candle, and now as you guys can see, the follow-up candle, after being resisted at the $219 level, has finally tried to break the $219 range, and it just might break the $219 range, indicating the big green or big red candle that we were just talking about. Now all I'm looking forward to is the stock hitting the $220 price, and once it does, there will be a pullback that I'm pretty sure of if my analysis is correct. So this entire range between 219 and 220 should be very crucial for this intraday session. Of course, if you're a long-term holder, this should not concern you that much. But again, as I already gave you guys these levels, you should probably mark these down on your charts. And if I'm right, let me know in the comments. If I'm wrong, of course, again, let me know in the comments. But with that being said, I could be wrong, so this definitely is not financial advice, and you should always do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel, Stocks 101, for more such videos. And as always, I will see you guys in the next one.